हाय गाइस, गुड मॉर्निंग। कैसे हैं आप लोग?
Good morning, sir.
जी गुड मॉर्निंग. Okay, welcome back to your session on SBL. I don't think we started much on the syllabus part yesterday. We just had a brief discussion about what the topics are, what the syllabus is all about, how the paper will be, and uh, more so on the similar lines. So today, what we are going to do is we will start with the topic first. Fair. Uh, as I told you, the SBL syllabus overall is divided into various subparts. They've got various sections. So how we will go about it is like today we are picking up, for example, governance. Okay. So we'll have a discussion around what do we understand by the term corporate governance. What are the contents of the syllabus? We'll have a discussion about what are the best ways in which companies will work, and post that we'll go for the examination questions. ठीक है जी? Fair enough?
Yes, sir.
Okay जी. So, what do we understand by the term governance?
To direct something.
Okay, to direct something. Okay ji. And when I say corporate governance, it basically means how to direct companies. Okay. So if I talk about the definition part, it says it was principles by which the companies are directed and controlled. Now the question comes in, ki boss, if I am running my company, why do I need the governance principles?
For accountability,
Okay,
some
for accountability,
responsibility,
responsibility. Okay, ji.
For better management.
For better management. Okay,
Consistency,
consistency as in.
having same procedure in every country or every branch.
Okay,
transparency,
why do we need transparency? If I am running my company, why do I want to be, or why do I have to be transparent?
because the shareholders have invested their resources. I mean, the stakeholders have their interests as well. So they have to know what the directors and the management and the companies are.
Okay, ji. Fair enough. So see, the basic idea is, he was the ownership is with my shareholders. Okay. So if, for example, all of us are shareholders, even if I own 70% of the shares of a company, still 30% you guys are also legitimate owners of the company. Okay. Even if any one of you is owning one share, two share, three share, you are the owner of the company. But just imagine, I buy the shares of Reliance and I say, okay, boss, I will enter the boardroom and take decisions. Do I think I will be, do you think I will be able to do that?
No, sir.
No,
Okay, and why is that?
you can't do because you're not a majority shareholder.
Not a majority shareholder. Okay. Imagine, I held so many shares of Reliance, around 100 or something. Still, I was not even called to the wedding. So, that's the ratio or the importance of the number of shares that I have versus what the Ambani family has. Fair. The idea is I might be the owner, but I don't have any control.
Yes.
Got the point? The management is with someone else. Is it with whom? It is with the directors. Okay. So, so for example, I am the director of Reliance and I want to award a contract. Okay. Uh, there are 4 5 vendors who basically provide that particular raw material, but I want to give it to my brother, who is able to source out that raw material. Can I do that? Hanji. So I am a director of a company. I accordingly, want to award a contract, maybe for sourcing out certain raw materials. Fair. Now, one of the vendors is a related party. Fair. Uh, he is my brother, runs that particular company. So obviously, I want to give him that particular share, contract. Can I do that?
As a director, you has the power to do that.
Yes, you can do
That
that.
okay, but you know, uh, another vendor who was not related to me, he was providing the same raw material at a cheaper price, similar quality raw material at a cheaper price. Who do you think should get the contract?
The other vendor,
No,
Okay, but I,
still he
hmm,
has the power to get your brother as a board of director.
okay, okay, fair
It
enough.
doesn't
So
matter if he is related to board of directors relative is not a matter here. Uh, but if he provides the similar and a good quality, then he can be.
even though at a higher price,
Because not much higher, there should be a cost comparison. If it is too much higher price, then you can't go.
okay. So even if even if I say that there's a difference in of 1 rupee, still that is higher. Why? Because you don't know what is the volume that I will buy. Okay. The idea is, hey boss, if I buy a raw material at a higher price, okay, I am the director, I hold the management, I buy certain raw material at the higher price. Who is losing money over here? Is it me
Yeah,
or the shareholders?
the
sure.
shareholders.
Obviously, the shareholders are the one who are losing out money over here. Just imagine, I another example now. I basically want, uh, you know, to appoint, I basically want to decide my remuneration. Okay. So when I want to decide my remuneration, what I basically do is I do what? I say, okay, boss, this year my remuneration is doubled. Can I do that?
See, if the company has, if you have shown that much of earnings to the company, and then it is possible. If
But
there is,
who is losing out the money in this case? Are the
shareholders, but
shareholders not
yeah,
losing out the money?
but still, if you have shown that much of earnings, then it is possible.
Okay, fair enough. But ultimately, who will lose out the money? The shareholders will,
Yes,
Shareholders.
the shareholders,
obviously.
but nowadays it is happening. It is in real life scenarios, it is happening.
Real
On this,
scenarios as well, it's actually true, and it's very well related. What usually has happened, just do a Google search in terms of the starting salaries. Okay, maybe you can do it for a CA professional. Okay, do a starting salary of a of a fresher as a CA in maybe 2010 versus now, and do a similar comparison of the starting salary or possibly the salary of a CFO versus what are the salaries of CFOs these days. You'll see, you can, meanwhile, while we are having this conversation, you can go around and check it, but you can see that there's not much of a difference in terms of the starting salaries of freshers, whereas the CFO salaries have gone almost 10x, 20x than what it was. They're earning in crores now. And the idea is, if the company is earning so much, why are not the freshers getting that benefit? It's just the top management. Okay. There are also cases wherein the company is not even in profits, but still the top management is drawing very, very, very huge amount of salaries. Okay. A lot of these startups, if you see, they are running in losses. They're basically going in for the valuation model. And still the founders, the top management, the CFOs, the so-called co-founders are drawing out huge sums of money. So who will ultimately lose out the money? Ultimately, the
Shareholders.
investors, the
The
shareholders
stakeholders.
will lose out this money. Okay. If we talk about a lot of corporate scandals as well that have taken place, you can talk about Enron, WorldCom, Satyam, ILFS, multiple corporate scandals that have taken place. What usually has happened is, was ultimately there was one person who was taking majority of the decisions of the company. Generally, the CXOs take the decisions of the company, and their decisions were for their own interest as compared to the interest of the shareholders. Ideally, the agency theory, basically what it states is, because if I am a director, I am a part of the management, my decisions should be in the interest of the company, my decisions should be in the interest of the shareholders, because they are my principals, they are the ones who are the legitimate owners, I am just representing them. Okay, so even if I award contracts to a related party at a higher price, that's not the best mechanism. Okay, I may have the power to do that. It is still not the best mechanism. Okay, very quickly, okay, just search on the ICICI Bank and Videocon case. If some of you are already aware about it, that's perfect. Others, I'm just giving you guys 2 minutes. Quickly do a search about the ICICI Bank and the Videocon case, and tell me what happened over there. Hanji, were you able to find out?
Yes, yes.
Hanji, what happened over there?
So ICICI Bank has given uh, Videocon a loan worth rupees 3,250 crore, which is around $450 million, under the ICICI Bank's then ex-CEO's leadership of Chanda Kochar.
Okay.
And the controversies are like that Chanda Kochar, husband Deepak Kochar, had business links with Videocon Group promoter, and they extended financial benefits
Okay.
to them.
Absolutely. So, considering there was a familiarity threat, the husband and the Videocon MD had close business and personal relations. Do you think ICICI Bank should have provided that particular loan to Videocon?
No, sir.
No. Okay. The same thing the agency said, and Chanda Kochar said, "Ki boss, it is a very big bank. It was not me. I was just the part of the committee which provided the loan." Okay, so it was a joint decision, because see, it's not a loan worth 1 crore or 2 crores. It's not a small amount. So it's not just one person who decides whether to extend that particular loan or not. It is a committee of members that basically goes ahead and decides whether to extend that loan. So Chanda Kochar basically said, "Ki boss, it wasn't just me. It was the entire committee that decided to extend this particular loan." And you know what did the authorities say? Ki boss, you should not have been a part of that particular committee. Because you were a part of this committee, you had the influence to kind of extend that particular loan. And considering that loan is not, it's becoming a non-performing asset, so that onus lies on you. Okay, so that's the, where the governance mechanism comes in. Okay, basically what you have to do is you have to represent your principals, you have to represent your shareholders, take decisions in their benefit. If anyhow you're going in, I don't understand. If anyhow you guys are going in for a related party transaction, you should provide adequate disclosures. Okay, you should provide adequate disclosures, uh, and try to refrain yourself from that particular decision making authority. Okay, same ways pe. See what essentially happened. I'm just quickly sharing the screen. Okay, so there are two things. One is the shareholders. Second. Okay, sorry, my pen is discharged. We'll have to quickly wait for a minute. Hanji. So one is कि boss, do not act as a party to those transactions wherein there might be a conflict of interest. Okay. So what the corporate governance principles came by after all these scandals took place, WorldCom, Enron, there were committees formed. They kind of analyzed how these corporate scandals are taking place, and they came up with a set of recommendation after each scandal. Okay. Now these recommendations have been clubbed together, and that's how this we have a UK corporate governance code. Okay, so this is the background. That was post the scandals. There were recommendations made on how to stop these scandals. What are the controls that should be put in place to ensure that these scandals do not take place? What will essentially happen is, boss, these recommendations have been clubbed together to form the UK corporate governance code. Now, any corporate governance mechanism runs on two bases. Okay, either we have a rule-based approach or we have a principle-based approach. Okay, a rule-based approach is, for example, in US. Okay, wherein we have the Sarbanes-Oxley Act, the SOX regulations. Okay, so in a rule-based approach, you have to comply with the rules. It is a law. You have to comply with it. If you do not comply with those particular rules, then you will face certain fines, penalties. Okay, even your stock market listing can be revoked. Fair. But on the other hand, the UK Corporate Governance Code is a principles based approach. Okay, because what it says is it is not possible for us to define rules for every situation. So let us give out broad principles which the companies should follow. The shareholders will basically judge whether the management is acting in a correct manner or not. Okay, so the UK Corporate Governance Code is not mandatory. It applies on all the listed companies, and it is recommendatory in nature. What it says is, boss, either comply with the UK Corporate Governance Code. If you are not able to comply with the provisions, give out an explanation in your report that why you have not complied with certain principles. It will then be on the onus on the shareholders to decide whether it is true or not, whether it is okay to continue with that management, or the shareholders might also go in for a change in the management. Okay. I think we should have a sufficient charge. Yeah.
Sir, can you
Sharing my
please repeat just once what you said about the UK Corporate Governance Code not being mandatory, and then what they have to give in writing? What do they have to give in writing?
Okay. See, two things. One is a rule-based approach, wherein you have to comply with the rules. Okay. So
Okay.
example is US SOX. UK Corporate Governance Code, on the other hand, it's a principle-based approach. It works on the mechanism of either you comply or you explain. Okay. So any provision that is given in the UK Corporate Governance Code, the listed companies have to comply with it. If they are not able to comply with those particular provisions, they have to provide an explanation why they could not comply with it. Okay. Where this explanation will come is in the annual report, there is a separate section known as the governance report. And in the governance report, they will basically tell, okay, boss, this is one provision we were not able to comply because of XYZ reason. Now the shareholders will judge whether it is okay or not, whether they want to stick with the same management that is not following the corporate governance principles.
Thank you.
Most welcome. We'll just quickly, go through the text and you'll have a better clarity over this. Okay, so we have basically the shareholders who are the owners of the company, and then we have the management who basically has the control of the company. Because of this particular segregation, we have what we need: corporate governance. Corporate governance is what? It is nothing but the principles basis which the organizations are directed and controlled. Okay. It is the way in which the companies are directed and controlled. Okay, ji. After all the scandals, the recommendations have been compiled and we have the UK Corporate Governance Code. What it basically says is that the board has to be divided into two parts. One, you should have the executive directors, and second, you should have the non-executive directors. Okay, so the executive directors are who? They are basically the employees of the company. They work for the company on a daily basis. Okay, they take all the decisions for the companies. Fair. For this work that these guys are doing, they will get salary, which can include fixed, plus it can include a percentage of profits, plus it can also include some stock options. So it can be a mix of fixed and variable salary. The UK corporate governance basically says कि boss, at least 50% of your board should be non-executive directors. So that means if you've got 5 executive directors, at least there should be 5 non-executive directors. There can be more, but at least 5 should be non-executive directors. Okay. Then these non-executive directors will not be employees of the company. So I'll just cross down on the employees. They are what? They are part-time members. They are not full-time employees. Okay. Their work is to only oversee the performance of executive board. That means they will check that whatever decisions this executive directors are taking, whether they are in the interest of the company or not. There is a very high requirement that these non-executive directors should be independent. Okay, because if, for example, in my company, my brother is a non-executive director, do you think he will be able to judge my performance, or will he be biased?
Biased.
Obviously, he will be biased. So we need these non-executive directors to be independent, and that is why we do not give them any salary. What we will basically give them is, in lieu of salary, they will get sitting fees. Sitting fees basically means the number of meetings you attend into the remuneration that is already agreed. So it's a nominal amount, it's not a very big amount, but you basically have to come in, attend the board meetings, and basis your attendance, you will get this particular sitting fees. If I start giving you salaries, immediately you will become dependent on the company. There will be a financial dependence on the companies, and we do not want that.
So
Now,
I have a doubt now. Who elects this ED as well as non-ED?
I will explain that as well. Don't worry. Okay. Now, the executive board is run by a very charismatic person known as the CEO. Okay. And we need an equally charismatic person to run these or to be the head of these non-executive directors. He is known as the chairman. So you can call him the chairman, or to be gender unbiased, uh, you can call him the chair. I'm just giving you a minute to kind of note down all of these things.
Mm. But in certain companies, the chairman and CEO will be the same.
Okay.
In that case,
Ideally, they should not be the same person. Very quickly, just search on your Google wherein it says Mukesh Ambani resigns as the CEO to continue as the chairman of the company. Okay, considering these are the UK principles that we are talking about, and a lot of these principles are similarly getting applied to the Indian companies, even the stock market. The SEBI regulations are slowly and steadily complying with these particular principles, and hence, you know, uh, the companies are taking their own sweet time so that there is a segregation of, no one person holds the position of both the CEO and the chairman. Okay, so UK corporate governance, basically what does it say is that the companies should be led by an effective set of board of directors. Now, these board of directors will be what? They will be a mix of executive and non-executive directors. Okay, this particular set of board of directors will basically have what? They will have a lot of subcommittees. Okay, so for example, the first will be a remuneration committee. The remuneration committee is made up of 100% non-executive directors. Okay, what this basically remuneration committee will do is they will decide on the remuneration of whom? Of the executive board. Okay, it says he was now, the idea is that whatever remuneration you guys are deciding, it should not be as in that was it is too low that no good director is sticking for the company. It should be adequate. Okay, at the same time you have to devise a remuneration that these executive directors work towards the long term interest of the company. Okay, so for example, if I get a salary of 50,000 per month, Do you think my vision is long term or it is just drawing out my salary?
Very short.
Very short. So let me add a percentage of profits to this. Okay, so that ways now my vision is not just my fixed salary, but how can I increase that is if I increase the profits of the company, my salaries will also increase. Fair. Now, profits is a very short-term measurement criteria. Why? Because imagine if I want to increase my profits of the company, I can just sell out a land. I can sell out non-current assets. I can sell out investments, and my profit will increase. But thereby, I am reducing the revenue generating capability of the company. So what will essentially I should do is for these executive directors, it should be a mix of fixed salary plus percentage of profits plus certain stock options so that they stick with the company for a longer period of time. Okay. And their efforts should be towards the maximization of wealth of the shareholders. Any doubts?
No, sir.
Perfect.
Sir, can you show that chart again?
Sure. I'm
For a
sharing the
minute.
screen again. So this is number one. Number two, we have the audit committee. This is again made up of 100% executive plus non-executive directors. Sorry, 100% executive, 100% non-executive directors. इसमें से ना at least one NED should have financial expertise. Why I'm saying that is because each and every aspect with respect to the financial statements, each and every aspect with respect to the auditors, the hiring and external auditors, ensuring the external auditors are independent, ensuring that the financial statements are getting reviewed, the auditors get timely information. If there is any fraud taking place, ensuring that gets reviewed, that gets resolved. Uh, Having a look at the internal audit department, checking in their ways of working, reviewing their audit reports, seeing how their recommendations are getting dealt with. Everything with respect to financial statements and auditors is dealt by the audit committee. Okay. Number three, we have the risk committee. Now, the risk committee basically will be a mix of executive and non-executive directors. Okay, what is their job is? Their job is to ensure that the risk appetite of the company is dealt with. Okay, their job is to essentially see, ki boss, what is the risk exposure that I'm having right now? Okay, because again, if the company goes in for very risky transactions, who will lose out the money? The directors or the shareholders? Obviously the shareholders. Okay, so their job, the risk committee's job, is to basically see, hey boss, whatever decisions the company is taking, it should be within the risk appetite of the shareholders. Let us ensure that the company does not take a lot of risky decisions and the shareholders' wealth gets eroded. Okay, here we need both the executive as well as non-executive directors, because non-executive directors might not have a very ground view of all the things that are taking place. Any questions, doubts?
Can you repeat?
The risk committee part?
Yeah.
Okay, so risk committee made up of executive as well as non-executive directors. Overall job is to see that the risk exposure of the shareholders of the risk exposure of the company does not exceed the shareholders' appetite. Where if I am a shareholder and the company is taking a lot of risky decisions, let us say the company starts investing in cryptocurrency, my wealth will get eroded if it does not work the way it should. Okay, so to ensure that all the projects, what is the level of risk exposure of these projects? How are we mitigating those risks? What actions are we guys taking to ensure that the risk remains lower at a lower threshold level? So that's the job of the risk committee. Just in case a risk committee is not there for any particular company, the audit committee will take that particular function. Fourth, we have okay, I'm sharing the screen again. Fourth, we basically have the nomination committee. I think one of you kind of asked, how do we elect these members? So nomination committee, again, made up of both executive and non-executive directors, but non-executive directors should have a majority over here. Their job is to basically see that the balance of skills and experience is maintained in the board. Okay, so for example, an effective set of board of directors should be a mix of someone from the finance, someone from the R&D, someone from procurement, someone from the sales and marketing team. They will basically see, okay, boss, now all these directors will kind of retire by rotation. So if someone from the finance field is retiring, we need to find another good replacement for that particular director. Okay, so they will go around, search, conduct interviews, and nominate people to become a part of the board of directors. They are not the ones selecting, they are just nominating. Okay, and then the board will collectively decide who should join that particular, which person should become a director in that company.
Sir, can you please explain quickly the chart? What will be
What should I explain?
the chart which you have prepared?
The entire chart.
No, the nomination committee.
Nomination committee. So nomination committee is basically a subcommittee of the board of directors. It is made up of executive and non-executive directors, though the non-executive directors should be in majority over here. Their overall role is to search people of high repute who can be nominated to become a part of the board of directors. Okay, so their job is to kind of ensure that the balance of skills and experience is maintained. If, for example, someone from the finance field is retiring, so they will search for another suitable replacement for that particular candidate. They will just nominate. Okay, the selection is made by the board of directors.
Oh, thank you, sir.
The shareholders in this case are principals, the management, or the directors are the agents. The directors should work towards the interest of the principal. Any question, doubt?
No, sir.
Chapaji.
No
Okay.
doubt, sir.
Okay. We'll quickly go through the text as well now so that you guys are comfortable. Uh, there is a separation between the owners and the managers. The shareholders are the principals, directors are the agents. Uh, so, what happens is the relationship between the principal and the agent is known as the agency theory. Although it is the fiduciary duty of the agent to act ethically and legally in the best interest of the shareholders. Okay. Some problems are such as the conflict of interest. I gave in the example of that I basically award a contract to my brother. Dishonesty, lack of integrity, if the directors are involved in committing fraud, ethical violations, if I use unethical ways to earn profits, and there's a lack of transparency. Okay, so if I kind of go ahead and window dress these financial statements, these are the problems with the agency theories. Of course, because I'm kind of hiring agents, hiring directors, so there is some cost involved. For examples, I have to appoint auditors to oversee that particular working. I will have to kind of arrange for annual general meetings and the normal general meetings so that these directors and the shareholders can have a meeting, can have a dialogue. There's a cost of meeting, financial analysts as well, and we pay these directors certain remuneration. Corporate governance is basically the ways in which the companies are directed and controlled. Obviously, the corporate governance onus is more on public sector organization or the public companies. Uh, because it is a principle based approach, it is essentially the onus of the shareholders to kind of ensure that the principles of corporate governance kind of be met. Especially, the institutional investors, the large investors, they should be actively involved. It should not just that they are just, going ahead and checking the share price. It should be that they should be actively involved in checking the ways of working. Who are the institutional investors? Insurance companies, mutual fund houses, pension funds, etc. Because they have a large pool of money, they invest in these companies. So they should actively participate in the general meetings. They should participate in key decision making. They should keep a record of the board composition, that was adequate number of non-executive directors are there or not. And they should also review the policies with respect to the board. We discussed about the rule-based and the principle-based approach. The example of a rule-based approach is, of course, the US SOX, and the example of a corporate governance principle-based approach is the corporate governance code. See, when we spoke about the corporate governance code, okay, so there are multiple principles. The important one for you is the UK Corporate Governance Code. The others are theoretical ones. So if I talk about the OECD principles, the ICGM, these are not examinable. Why? Because they are very generic in nature. Okay. So I'm just reading through these OECD and the ICGM principles, but these are not exam relevant. The UK Corporate Governance Code that we have discussed in detail, that is more exam relevant. So OECD principles ensure that the basis for an effective corporate governance framework, there should be transparency and efficient markets. They should be consistent with the law. The rights of all the shareholders, key ownership functions should be kind of met with. There should be an equal treatment of the shareholders, including the minority and foreign shareholders. We should recognize the rights of not just the shareholders, but all the stakeholders. And there should be a timely and accurate disclosure of material matters. The board should assume the responsibilities and kind of comply with it. So if you see, these are very generic in nature. They're not actually telling you what is to be done. Same is the case with these ICGN principles that was, uh, we should create value over the long term for the company. There should be corporate boards. It should have its responsibilities, times, composition should be defined. The corporate culture should be defined. We should have a code of ethics. We should have anti-bribery, policies. Whistleblowing mechanisms should be there. Adequate risk management procedures should be there. Remuneration of senior management should be aligned with value creation. There should be a very robust auditing procedures wherein we are checking in the financial statements. There should be adequate disclosure, transparency. Uh, a lot of companies, if you talk about, are going in for integrated reporting now. What do we understand by the term integrated reporting?
Financial reporting, environment reporting, socio-cultural
Okay.
reporting.
Okay. And along with that, we also talk about the strategy of the company. So that's more about bringing transparency. Okay. Not just your annual report, but an extended version of the annual report wherein you are telling the shareholders how the organization is creating value over the short, medium, and long term. We have a full-fledged, section of integrated reporting, which we will discuss. The shareholders' rights the directors are accountable to ensure that all the shareholders' rights are met. And the shareholders also have certain responsibilities, especially the institutional investors. They should take care, they should ensure that the principles of corporate governance kind of get met. Okay, these two are relatively generic, not considered from an examination perspective. From an examination perspective, the UK Corporate Governance Code becomes more relevant. Okay, so what will happen over here is every company should be headed by an effective board. Now, this is the relevant part, which works towards the long term success of the company. There should be a clear division between people running the board and the executive responsibility for running the company. So, for example, for that, what we have is we have the executive and non executive directors, and the role of CEO and chairman should not be performed by one person. Overall leadership of the board will be held by the chairman. Non executive directors should be appointed that should constructively challenge the proposals on strategy. We should have a balance of skills, experience, independence, and knowledge in the board. NEDs should be at least 50% of the board. Okay. Small companies may, at the minimum, we need 2 NEDs, but for large companies, at least 50% of the board should be non executive directors. New directors should be appointed by the nominations committee. Uh, Again, all directors should allocate sufficient time to the business. Whenever a new director is joining, they should have a proper induction program wherein you are introducing them to the company. The ways in which the company is working is fully explained to them so that they are able to add value. All these directors should be provided with timely information. Okay. The board's performance should also be evaluated. जैसे आपका होता है ना, every year end, the employees get an appraisal, their performance is judged. Same ways पे, the board's performance should also be evaluated, and the director should be submitted for re-election at regular intervals. Considering it's a global syllabus, that is why these intervals are not defined. The board is ultimately accountable for all the decisions. We need to have an audit committee in place. Again, non-executive directors. Everything with respect to the auditors, with respect to the financial statements, accounting problems, etc. The internal controls of the company, etc., are held by the audit committee. We also have a remuneration committee in place that basically decides the remuneration of executive directors. It should be sufficient to attract, retain new client. but it should not be that boss, the company is not earning and you guys are taking in all the money. Then there should be an adequate dialogue between the what do you say, shareholders and directors, and hence we have these AGMs, general meetings, extraordinary general meetings, etc., so that the shareholders can question the decisions taken by the board. There are two kind of structures that are prevalent for a board of director. One is a unitary board and the other is a two-tier board. So in a unitary board, what will essentially happen is that boss, this is one set. Both the executive and non-executive directors will sit together, take the decisions. Obviously, the decisions will be taken in a timely manner, in a efficient manner. All of them are sitting together in one meeting, they are taking the decisions. Whereas in the two-tier board, what is happening is we have the supervisory board, and below that is a executive board. So that means the decision making is split. They are the ones who are basically overlooking the decisions by the executive board. Okay. So maybe the employee unions can become members over there. Maybe someone from the society at large is kind of becoming a member over there. But there will be a slower decision making over here. Okay. And the flow of information might not be complete.
The non-executive director will be also for this board.
Correct.
Executive will not.
In the supervisory board.
Yeah. Yes. And executive board, like executive member are not allowed. Executive director are not allowed to be part of this board.
Yeah.
No, can you explain in brief about this two-tier board? Because in unitary also, ED and NED both are there.
Both are there sitting together in one meeting. Okay, together collectively they are taking the decisions. But what will happen in a two-tier board is, boss, we have the operating board, essentially the executive directors and the CEO. They basically manage the day-to-day businesses, whereas the supervisory board, they have representatives from various stakeholders, environmental groups, etc. The chairman kind of leads these, you know, uh, supervisory board, and they are responsible for appointing and supervising the members of the lower tier. That means the lower tier operating board, they will kind of supervise them, appoint members over there, and provide a strategic oversight. Okay, they're not collectively sitting together taking the decisions. There may be some times wherein the operating board has taken a decision which then gets reversed by the supervisory board, so it delays the functioning of the company.
Quick doubt, the supervisory board does include non-executive directors, correct?
Correct.
Okay, thank you.
In two-tier board, one is supervisory board and another, what is that?
Unitary.
Executive board. Okay. Executive board will have only executive directors, is it here?
Absolutely. See, it's written over here. The lower tier operating board or executive board, this will have executive directors headed by the CEO.
Okay.
Non-executive directors, these are basically non-executives. They do not take part in the day-to-day activity of the company.
There is not audible and visible to the right.
Yeah, it's not
Yeah.
meeting option.
Hi, does anyone have this study material with them? As my LMS does not have this right now.
You mean the Zell provided study?
Yes, yes.
Yeah,
Yeah. Can you just share this via chat or something?
I have the physical copy.
Yeah.
Oh, does anyone have the PDF that we download from Zell?
Yes, I have it. I mean, I can't be on Zoom.
You also don't have?
No, and I don't.
Yeah,
Yeah,
same.
same.
Yeah, I have it. I can share.
In that
If
that
someone
PDF,
have it, then if they can share, then it would be good.
uh, we don't have PDF, but in that Zell website only we can.
Yeah, I went to the Zell website, but the practice hub for SBL is not added yet in my LMS.
No, that steady text is there, but steady text is.
No, I am not able to find that. Like in my SBL page, it is not showing there, the study text.
You can contact the Zell Executive. They will. I hope you're looking for a delivery soon for your
Yeah, I'm
study.
doing that, but I thought if
Yeah.
someone would have, then they could share. Okay, no worries. Thank you.
But you can approach to the Zell. And
Yeah, I'm
ask.
doing that. Yeah.
Is there anyone from Mumbai? Anyone from Maharashtra? No. Anyone from India?
I'm from Mumbai.
I'm from India.
Maximum people would be from India, I think.
Yeah. From Mumbai, can you?
Yes.
If that's fine, can you share your location where you stay?
Andheri. Where do you stay?
I stay in Kurla, like near Sion.
Okay, Kulla.
Sion.
Sorry. Okay.
But I work in Andheri.
You work in Andheri. Where MIDC sleeps?
No, near Sakinagar.
Sakin. Great.
Darshan, right?
Yes, Darshan.
You stay in Andheri. Okay.
Yeah.
Can you? Yeah. Just wanted your contact number.
Huh? Sorry.
I wanted to contact you after.
Okay.
Yeah, we can discuss something later.
Okay. I will share my contact via chat.
Yeah. Sir is not there. So, if people living in Mumbai can make a group and coordinate and
I
discuss.
think we should make an unofficial group for
Yeah.
everyone so
Yes.
that we can share our doubts as well as some materials if we have.
Yes,
Maybe we can
I think
also
Dinesh has that study material, so we can create a group he can share there. So
Yeah.
that
we can also create a virtual study group. Like we can connect virtually and sit and practice sort of things.
Yeah, that's a
Yeah,
good
we
idea.
can do that.
So for study material, they have said that the study material will be uploaded on Zell LMS, but it is still not
Yeah, it is still not there. Yeah.
Yeah. So they said by Tuesday max they will be uploading it.
Till the time being, Dinesh is able to share with everyone, so we can create a group so everyone could have that.
We can interact. That would be helpful. Someone, other people can share where they stay and at least the city. If that is good for group study. Yeah.
Okay. When did I lose you guys? At what point?
Non-executive directors, we had just started with that part.
Okay. I was kind of in the flow and I did not realize the connection had disrupted because my screen was shared. No worries. Share it again. Can you help me with the page number?
90 in my book.
Yes, 90.
Okay. So non-executive directors, they do not take part in the day-to-day decisions of the company. They just oversee the board. They have more of a supervisory role. Executive, they basically have to see that the executive directors don't act in an unethical manner. It is very important that these non-executive directors are independent from the company. So that means they do not have any financial or non-financial interest. They bring in external expertise, scrutinize the performance of the board, and ensure adequate internal controls are there or not. They will become part of the various subcommittees of the board, such as your risk, nomination, remuneration, and audit committee. The board composition of the board will be a mix of both executive plus non-executive directors. This will consist both CEO and the chairman, equal at the most, at least there should be an equal number of executive and non-executive directors. Ultimate, whose responsibility is to run the board? It is the chairman's responsibility. He acts as a link between the shareholders and the company. He's the one responsible for protecting the rights of the shareholders. CEO क्या करेगा? He will propose strategies, implement decisions, and monitor the day-to-day activities. Okay. Ideally, as per the corporate governance principles, there should be a split of role between CEO and chairman. If we do not split their roles, what will happen? There is no accountability and he will use his powers at his own discretion. Any questions, doubts?
No, sir.
Any director that joins the company should have a proper formal induction. Okay. In the induction, we will tell them what are the various strategies, business plans, what is his role and responsibility with respect to a director, what are the code of conducts to be followed by all employees and directors, and what are the other informations that are necessary for him to kind of oversee the performance. Okay. Not just the induction part, but there should be a continuous professional development. Similarly, once you guys qualify and become ACCA members, you need to complete certain number of hours every year as a part of your membership to retain your ACCA degree. Okay. If you do not kind of log in these hours, then your degree will not be valid. Okay. So similarly, these directors as well need to go through the CPD hours. Okay, they should take in professional courses, go for certifications, read books, attend trainings, just to ensure that they are relevant for the company. They are adding certain value for the company. And ultimately, who will see? The nominations committee will oversee whether the CPD hours are completed by these directors or not. Overall, the performance of the board should be appraised, not just the employees, but overall the board's performance will be appraised. It can be on the basis of whether the shareholders' wealth has grown or not, whether the company has achieved a certain growth percentage or not, whether we have complied with the relevant laws and regulations or not. There should be a diversity in the set of board of directors, you know, uh, people from different age, gender, background, ethnicity should become part of the directors of board of directors. uh, we should have someone from the finance, someone from the R&D, someone from the production team. These will basically enhance the company's reputation. Any doubts?
No, sir.
Okay. Then they've just given out the role of these committees very quickly. If you can read these out.
The screen is unshared, actually.
So what does it mean that demonstrate that remuneration is set objectively?
Anji, sorry, you were asking a doubt. I was on mute.
I was asking, what does it mean? Demonstrate that remuneration is set objectively.
Objectively, that means there's no bias. So for example, I give Bianca a higher remuneration as compared to you, irrespective of your experiences. Okay, so it should be unbiased. So what I'll do is I will give out a mechanism in which the remuneration will be set. It should be a mix of both fixed and variable. It may contain part of profits and stock options.
Okay.
The non-executive directors, on the other hand, will only get a sitting fees. They will not get any salary or profits or stock option.
So can you please share the soft copy of the study material?
Okay. Do you not have it via the LMS? Ideally, the PDFs should be uploaded.
It's not there.
Yeah, it is not there till now.
Acha, no worries. I'll share it post the session.
Yes, sir.
Naji, any questions, doubts?
No, sir.
Okay, the SBL material is shared in the chat. Anyone? Thank you, Dinesh, for doing that. Okay. So we'll take a quick break here for breakfast. Okay, it is 10:30, 11 o'clock. We resume the session. I would want to take you through a governance report live so that it's not just the theoretical part that we are kind of going through. Let's have a quick look at a governance report, for any listed company. And if time is left, we'll definitely go through the examination question as well. Meanwhile, in the break, if you're done with your breakfast and everything, feel free to kind of go through the text and let me know in case you have any doubts. Okay, we resume the session at 11.
Sir, can I share the WhatsApp group link which I have created for like unofficial one in the chat?
Sure.
Thank you.
हाँ जी. अच्छा, tell me one thing. Have you all received the question bank yet?
No,
Okay,
no, sir.
not yet. Let me share you one copy. I have shared one question bank का copy on the WhatsApp group. Okay, so it is question number 1, Roshan Company. What you have to do is you have to essentially write a report to Timothy Roche criticizing the governance arrangements at Roshan Company and assessing the usefulness of a nominations committee to the company. It's a 18 marker question. What we'll basically do is we will break down the requirements into two parts. First paragraph will be criticism of the existing governance structure, and the second paragraph will be how exactly will a nominations committee help over here. ठीक है जी? Fair? So I'm giving you guys kind of 5 minutes. Read through the scenario, plan your answer, and we will discuss this. Let me know once you guys are done.
Need one more.
Okay, so I'm kind of reading this with you. It says, Timothy Roche, Mary Hobbs joined the board of Roche and Company, a large retailer, as a finance director earlier this year. ये दोनों लिखा है। Thank you. Okay. Well, she was glad to have finally been given a chance to become a finance director after several years as a financial accountant. She also quickly realized the new appointment would bring her a lot of challenges. In the first board meeting, she realized not only was she the only woman, but she was also the youngest by many years. Any issue over here?
Yes, sir. No diversity.
Yeah, no
Okay,
diversity.
there's lack of diversity. There's lack of she was the only women director. That too, she's joined now, as well as the other members are very senior. So, lack of diversity among the board. Roche was established 100 years ago. Most members of the Roche family have occupied senior positions since the outset, even after the company's flotation. Flotation basically means the stock market listing. So that means since the past 20 years, the company has been listed on the stock market. But who are the directors? Majority of the members of the Roche company. They have either been the executive chairman or the chief executive. Any issue over here?
Chairman is not independent.
Okay, lack of independence for the chairman. At the same time, there is no criteria to hire the executive directors. Just the basic qualification that was required was if you're a member of the Roche family, you are becoming a director or occupying the position of the board. Okay, so the company is not being led by an effective set of board of directors. The current long-standing chairman, Timothy Roche, has already prepared his slightly younger brother, Geoffrey, also a member of the board, to succeed him in 2 years' time when he plans to retire. Roche only still owns 40% of the shares, consider it their right to occupy the most senior positions in the company. So they have been very active in external. So they have never been very active in the external recruitment. They only appointed Mary because they felt they needed a qualified accountant on the board to deal with the changes in the IFRSs. Okay, so that means ki boss, before Mary joined, there was no director with any financial expertise, which also means that boss, there was no independent non-executive directors as such to act as a member of the audit committee. At the same time, Mary is also not a independent non-executive director. Why? Because she was in appointment with the company. If you were already an existing employee, you are no longer independent to become a non-executive director. Several former executive members have been recruited as non-executives immediately after they retired from full-time service. Do you think this is correct?
No, this is not correct.
So after you complete your employment, you need to abstain yourself for a certain period. Only then you can become an independent non-executive director. Immediately post your employment, if you start acting as a non-executive, you will not be independent as a NED. A recent death, however, has reduced the number of non-executive directors to 2. Imagine a company which was floated 20 years ago on the stock market only has 2 non-executive directors. Whereas what is the requirement?
At least 5 for small
50%.
company.
50%.
50% for the large.
At least equal to. So executive board is 7. That means, ki boss, overall we need at least 7 independent non-executive directors. Mary noted the board meetings were rarely contain any significant decision on strategy and never involved any debate or disagreement. When she asked why this was, she was told that directors had all known each other for so long and they knew how each other thought. Okay, so again, not an effective set of board of directors, absence of discussion with respect to strategy meetings. All the other directors came from similar backgrounds, again, absence of diversity, and had worked for the company for so long that they knew what was best for the company. Many observed the notes on strategy were not presented at the board meetings, and she asked Timothy whether the existing board was fully equipped to formulate strategy in the changing world of retailing. Okay, so again, lack of, what do you say, continuous professional development for the directors, and whether a nominations committee would address such a weakness. She did not receive any reply. Hence, his report kind of reached out to you as an external consultant to see to hide weaknesses. Conceptually, it is clear.
Yes.
Yes.
Okay.
Yes, sir.
How do we write the answer is, we start with the report ka format. So I'll show you the format very shortly. We start with the report ka format. We say the introduction ki boss, this below report addresses the weaknesses at the governance structure for Roshan Company, and it also highlights areas where the nominations committee can address such weaknesses and help the company to bring out a effective set of board of directors. Okay, then we divide our answer into 2 parts. First will be the, what do you say, the issues in the current governance structure. Okay, always, we never answer in pointers. It's a strategic business leader exam. We always answer in paragraphs, and wherever we can, we give suitable headings to the paragraphs. That means we club the similar pointers together and give out suitable headings. Okay, so you divide your answer into 2 parts. First is the issues at the current governance structure, and the next part of your answer will be how exactly a nominations committee will help you to solve this issue. In the second part, you will give out a small brief that a non-executive nominations committee is a subcommittee of the board of directors made up of executive and non-executive directors whose role is to nominate people to become part of the board of directors and maintain the balance of skills and expertise. In one liner, you don't have to explain that in detail. And then after that, you have to kind of come and bring it to the case study. You will have to kind of explain, okay, boss, in this case, if we have a nominations committee in place, it will kind of nominate people from all backgrounds to maintain that balance of skills and expertise. It will, what do you say, ensure proper induction is taking place. It will ensure adequate dialogue is there between the shareholders, etc. Okay, ji. So I'll quickly walk you through the answer as well. Okay, so this is a Roshan Company. It is a report. This is the format. I'll share a list of all the formats. I have that handy. That's not to worry. We start with the subject, we start with the introduction, then the first part of your answer is the weaknesses in the existing structure. What we do is we always answer in paragraphs. So, for example, non executive directors is one issue. Succession planning was another issue wherein, there is lack of scrutiny, lack of independence of NEDs. Then again, the once the current chairman is retiring, there is no other mechanism, just a member of the family member is getting prepared. Lack of diversity is there, adequate strategic planning is not taking place, and there's no adequate training and development. Okay. Then in the second part of your answer will be the nominations committee, wherein first you give out a generic role and then you say, Ki boss, how will it exactly be useful for Roshan company? So it will recommend how many directors would be needed to run the business. It will resolve the issue over number of NEDs required. It will resolve the issue with respect to independence of NEDs, and it will make recommendations over the succession of the board. Once you're done with this, you will basically do what? You will summarize your answer in the name of a conclusion. The corporate governance arrangements at Roche are far from ideal and need to be addressed to ensure investor confidence. A nominations committee will go some way to resolving these problems, if not the whole solution. If you require more detailed advice on how to implement such changes, then I would be pleased to assist. Anji, any questions, doubts over here? In terms of the concepts, we are clear.
Yes.
Yes, sir.
In terms of the writing style as well, are clear now?
So how
What
many
exactly are you supposed to write in the exam?
chance of
How
getting
many
this
what?
question?
Acha. Okay. See, the questions do not get repeated. Okay, that's one. Second, the exam kit that you have in front of you is more for a concept. Why? Because it's a new paper. The new format basically has one case study and has got various subparts. So it is not possible for maybe a Kaplan or a BPP or Zell for that matter to kind of give out individual questions. Okay. So the questions provided over here are for your concepts. It is not saying that this question will get repeated. Okay. The idea is how to understand the concept and how to write down the exam. Once we are done with the syllabus, once we are done with the examination kit, it is assignment papers, the mock exams, etc. And that will actually help you on how to write answers. Okay. Be very clear in your mind, similar questions will get repeated. So you have to develop your thought process on what concept, on how to write down the answer. Okay. It is not a strategic business reporting. It is not. Are we all clear with this?
Yes.
Once we are done with the conceptual questions provided in the exam kit, that's when we'll go on to the past examination papers, the mock papers, the pre-seen material, etc., wherein we can see what kind of questions might come in the exam.
Yeah.
Okay?
Okay.
Challenging. Perfect. Very quickly, I'll share the screen again. And this is again a nominations committee question 4. So this you can do on your own. Okay. Question number 3. It's fairly a straightforward question. Okay. It's not a case study based question, but still. It says draft a set of notes for Martin Monk that explains the difference between a rule based and a principle based approach to corporate governance regulation and sets out the counter arguments that opponents would use against his belief that comply or explain is ineffective. Okay. So basically, what is happening is that we have a certain person known as the Martin Monk. He thinks that comply or explain is not the most effective approach. His thought process is given in the case study. Pick 5 minutes, read through the case study, and then we'll discuss the solution.
Sir, uh, sir, I have a small doubt.
Yeah,
Over
go ahead.
over here also, is it a thing that we read the requirement first and then the study, or how do we?
Okay. How to go about in the exam scenario? That again we'll tackle it once we are dealing with the first, the full question. But in the examination, how it works is you're given out a short introduction paragraph first.
Okay.
Okay. Then you're given out the requirements. Okay. And below the requirements will be the exhibits. Okay. So in the same order, you'll read in the examination first a short introduction, then the requirements, and then finally the detailed case exhibits. Over here, since these are short questions that we are practicing, so first we'll read through the requirements so we know what exactly are we searching for, and then we'll read through the case study.
Okay, got it. Thank you.
Let me know once you guys are done. Ji, are we done?
Yes.
Chaliye, I think I don't see the requirement to kind of go through the question, considering there's nothing much from a case study perspective. It's fairly straightforward. How we would want to answer this is, first, in one liner, we would want to say what is the rule based approach and what is the principle based approach. So, rule based approach is basically based on the provisions made under any law, and breaching those provisions is basically a legal offense, which will attract, of course, fines, penalties, or delisting from the stock market. A principle based approach, however, is making a compliance with a detailed code of condition. Okay. For whatever reason, if a company is unable to comply in detail with every provision of the code, the listing rule states that the company must explain in the annual report where it failed to comply with the reasons. Okay. The idea is that, boss, there is no law, but overall the markets. So if, for example, the shareholders see that the corporate governance principles are not uh, being followed, they'll sell the shares. And if they sell the shares, the stock market prices will fall. So that's the idea behind a principle based approach. Do you think comply or explain is ineffective or effective?
Effective, sir.
Okay. We cannot say that this is ineffective. Why? Because listing rules insist on compliance. Okay. If the shareholders are not satisfied with the explanation, they can punish the board by several means. How exactly will they do that? Is in way of general meetings. They can start selling shares. They can also have a direct intervention. So if a lot of small shareholders come together, fair a union, they'll kind of change the management. It is seen an alternate to the rule-based approach. It enables policing by compliance by those who own the entity. So that means the shareholders are the one who are pushing for the compliance, and hence they are strongly vested in the compliance than the state regulators. This places responsibility for compliance upon the investors who are the legal owners. Okay. It reduces the cost of compliance because SOX compliance is, it's a rule based. So of course you will have to hire people to ensure they'll carry out the SOX testing. And then there is a lot of cost involved, a lot of disruption involved. So we cannot kind of make rules for everything. We cannot say, okay, boss, one size fits all. And hence the, what do you say, a principle based approach is more flexible. Okay. It relies on the ability and the willingness of the shareholders in capital markets to enforce compliance. Rule based approach relies on the law enforcement officials. That's the only difference. But in no way can we say that it is less effective as compared to the rule based approach. Any questions, doubts?
So in the, like, when we are writing in the exam, can we point out only the key pointers, or should we write all these paragraphs? Things like key pointers means it will end in 2-3 lines, but additional things will take much time. So only key pointers are enough.
No, so you'll have to write complete sentences in paragraphs. Okay, you cannot write in short
But
pointers.
but if key pointers means like what exactly required, only those
Ah,
things.
that
It
will work. That will work. In your own language, you can write down your answer. Okay. So once we're kind of going through more detailed questions, the examination questions, I'll let you know. Okay, boss, this is the weightage involved and how many lines, etc., that you'll have to write in the examination.
So, the counter arguments that opponents could use against his belief that comply or explain is ineffective. How do we explain this part?
Okay. The idea is that Martin Mong is saying that comply or explain is ineffective. Fair. We start out by addressing that this, however, is not true. Okay. In a rule-based approach, the onus is on the legal authorities to enforce compliance. However, in contrast, in a principle-based approach, the onus is on the legal owners, the shareholders, to enforce compliance. They can affect this compliance by calling out extraordinary general meetings, making the directors accountable, start selling shares of the company, or, if possible, by coming together, changing the management altogether. Okay, so because we have a lot of options in a principle based approach, it's more flexible. It kind of accommodates the fact that there's no one size fits all. Hence, it is considered to be all equally effective as compared to the rule based approach.
Okay. Okay, thank you.
Most welcome.
So we sort of have to explain the principle-based approach, the pros of the principle-based approach in the
Absolutely,
counter
yes.
arguments, correct?
Absolutely. Because
Okay.
he is saying that principle is ineffective. So obviously we'll have to kind of explain why it is considered to be effective.
Actually, it is a little easy to, when you're reading a scenario, it is easy to give the reason, but when you're writing it, it is little difficult. That is the
Happens. That's okay. Considering it is just the start, and just possibly one of your first sessions, so you'll have a better idea on how to write in the examination. Acha, for a quick practical perspective, I don't want everything to be theoretical for you guys. I would want it to be kind of practical. So for a quick practical perspective, I've just opened randomly Reliance ka annual report. And when I open this annual report, what I see over here is that they have the entire set of corporate overview, how exactly the value is getting created. They have the financial statements, the audit reports, the integrated report as well, which we have to discuss later. And over here, we have the corporate governance report. Okay, ji. So in the corporate governance report, this is basically told you all the philosophies of Reliance. It was in accordance with the SEBI regulations and the corporate governance systems. This is what the current governance structure at Reliance looks like. These are all the ethics governance policies at Reliance. This is the code of conduct that we follow, which is applicable to all the directors and the employees. We have a vigil mechanism, we have a whistleblower policy, so that just in case any employer feels that there's a basically incorrect practice growing on in the company, they can report it out discreetly to the top management and we can take the efforts. We have a ethics and compliance task force in place, which basically ensures compliance of all ethical matters. This basically works under the audit committee. We also have anti-bribery and anti-corruption policies just to ensure that there is no bribery corruption practices taking place throughout the company. As a part of the corporate governance practices, on a quarterly basis, we have a review with the stakeholders relationship committee, the board committee for oversight relating to risk, corporate social responsibility, business responsibility, etc., executive committees of senior management for continuous review of operational and financial risk mitigation, इंडिपेंडेंट ऑडिट फंक्शन का रिपोर्ट का रिव्यू होता है, क्वार्टरली सेक्रेटेरियल कंप्लायंस सर्टिफिकेशंस होती हैं, and an assurance is obtained from an independent firm of chartered accountants. We also publish an integrated reporting, which is in line with the reporting council requirements. We have a board of directors, and if you see, they've given you a profile of the board of directors. So over here, just one second. Yeah. So over here, what is happening is, for transparency, for better accountability, they have told you the names of all the directors. When were they appointed? How many shares do they hold? Are they directors in any other company or not? So Mukesh Ambani is director in two other companies. Okay. What is his area of expertise? Okay. Is he a director in any other listed company? No. We have Adil. He is an independent director. Okay. This is his director identification number. So by way of DIN, we are able to kind of identify how many other companies is he a director in. So he's a director in Cipla, Network 18, TV 18, L&T. Again, he's an independent director. What is his area of expertise? How much shareholding does he have? So considering he is independent, he does not own any shares in Reliance. We have other directors, whether they are independent or what do you say, dependent, possibly executive directors. So these are all the details over here.
Independent
Okay.
director should not hold any shares.
See, that's not true, but he should not have any substantial say because see, it's a global syllabus. We cannot define limits. The limits will be prescribed. For example, Reliance is listed in India, so the Stock Exchange Board of India, the SEBI, will define rules for any Indian listed company. Okay, from an ACCA perspective, don't think about limits. Don't think about numbers. Okay, independence should be perceived from a third person's perspective. So, for example, we had a independent director over here who held 91 equity shares. Okay. Same base way, 14,000 equity shares are being held by Shumit Banerjee. The idea is it is not a substantial amount of stake that these guys hold and hence categorized as independent.
Got it.
They've also very categorically told out these directors, how many board meetings have they attended? Okay. So if you see over here, Nita Ambani was a director till this time. What do you say? She has just got 66.67 percentage of attendance. And why exactly is that? Because we have a, what do you say, explanation. That was August 2023 May, she ceased to be a director of the company. Okay. So which director is attending how many meetings? What is his percentage? When was he present or not? All of these details are provided. How exactly the board compensation is taking place? There's a proper remuneration policy for that. What is the remuneration for these executive directors? How many, how much of remuneration, how much salary are they getting? How much benefits are they getting? What is the commission that these guys are getting? What is the pay for the non-executive directors? That's also told over here. What are the various board committees that we have? Audit committee, nomination, remunerations, corporate social responsibility. So the ones that in our syllabus were just the 4 ones, there are several other committees as well present over here. Who is a member of the audit committee? So these 3. Okay. What is their role? Who is the member of a human resource remuneration and nomination committee? These people. Okay. When did the meetings take place? On what date did the meetings take place? Who all attended? Okay. Everything is provided over here. The risk committee, what is the composition? What is the composition? What is the role? What was the attendance? That is the level of transparency that is getting attached because of these corporate governance frameworks. Okay. If they are not following any of the principle in this section only, they'll say, okay, boss, this is one provision that we are not following. And accordingly, we will possibly address it at towards maybe in the next financial year. When did the AGMs take place? When did the review take place? When was the stock market listing? Where exactly are the shares, bonds listed? Everything is detailed out. Who is the debenture trustee? how many debts have been issued, what is the prices, what is the volume, what is the trading, what are the share prices that are going on at each of the index. All of these details are provided in your corporate governance report. Okay, so your homework for this week is two things. Practically, go through the corporate governance report for any listed company, not particularly Reliance, any listed company that you want to go out, have a look at it. Okay. Second, revise the governance part that we've discussed in the session today. Okay. Uh, I think two questions we've covered, two others you can cover it as a part of your homework. Third, you have to cover the technical articles from the governance part. I'll just quickly open the technical articles for you. So I simply search ACCA SBL technical articles. I open the link provided over here. So please, and see, section wise, these are provided on the ACCA website. So I quickly click on governance, and they're talking everything corporate governance inside out. They're talking about stakeholders, what is the diversity of a board that is required, what do we mean by the term independence, how exactly the governance works at a public sector company. Integrated report, we haven't quite touched upon till yet. We'll cover it possibly in the next session. But what are the different board committees that are required? There are YouTube links as well. Okay, again provided by the examining team. So just go through all the articles. Let me know in case you have any questions, doubts once we meet in the next session. Okay, so next Saturday we'll continue with another section. Fair? We'll pick up another section, discuss it, do the questions, see if practically we can relate it to any other listed company, etc. Meanwhile, have an amazing week. That's it from my side. Stage is open for questions, doubts, others. If you don't have a doubt, feel free to leave the session. I will see you guys next week now.
Thank
So, can you please explain me once the composition of executive and non-executive directors? I'm a little confused with the numbers. Can you take an number example and just
Okay, so I have a company in which there are 6 executive directors.
okay,
Okay, how many non-executive directors should I have now?
at least 50%. So that's 3, right?
50% means of the overall board. Okay,
Overall
so
board.
6
Okay.
are executive directors. So that
Okay.
means I would need at least 6 non-executive directors. Why? Because then the total directors count is 12
12.
and
Okay.
50% is non-executive directors.
Oh, okay. Okay. 50% of the total board.
Overall board, correct.
Overall board. Okay. Thank you, sir.
Because see, that is only when we go in for the decision making, when we count the votes, that's when non-executives will have some say. Otherwise, 6 executive directors will go in one direction, 3 non-executive directors will not be able to stop them. But if we
Correct.
have a equal strength, that's when they'll be able to kind of stop them and possibly challenge their powers.
Okay, sir. Thank you.
Is that like a rule or is it just like a general practice?
Sorry?
Is that like a rule or is that just general practice, like to have equal, NEDs and executive directors?
Again, this is a principle of corporate governance. If the companies are complying with this, well and good. If not, they will have to provide an explanation why there are less number of non-executive directors. Shareholders will accordingly take an action. If they feel that's okay, they don't want NEDs in the picture, then that's okay. If they feel, boss, the corporate governance regulations are not getting complied with, they might go in for changing the management. They might also go in for, what do you say, selling out shares of the company.
Okay.
So you told to look into technical articles from ACCA website. So at least, is there any number on how many technical articles should we look into?
All the ones. Okay, you can just possibly rule out the integrated reporting one. But other than that, you can go through all the other governance ones. See, I'm sharing the screen again. If you see over here, when you open the technical articles page, you'll come to this link. You click on governance because that's the only part that we've covered till now. Fair.
Okay.
And then you can start reading through all the technical articles that are there as a part of governance.
Okay, only this
Take out,
much is this
yeah,
much is
this is the governance part.
okay. Got it. Okay. Actually,
Your
yeah.
entire syllabus will go in section wise. So possibly next week we'll pick out leadership. Okay. So once we have discussed those particular topics, then after that you can go through the technical articles for leadership as well.
So for this week, the entire governance is completed, right? The entire governance
Correct.
part.
Correct.
Okay.
Okay.
Thank you. So yeah,
Most
but I have
welcome.
noted down the assignments. First, we need to revise this governance part. Then we need to complete our illustration sums. Then technical
Correct.
articles. Then we need to check into an annual report of any company and check out the governance part.
Yeah, just the governance report, not the entire, and the entire annual report is 400, 500
No,
pages
only
document.
governance. That's what.
Just the
In the annual
governance
report,
part.
okay.
Correct.
Okay. Okay, thank
So
Most welcome.
Is there any tips you want to share with respect to governance part? Any other tips?
No, that's okay. First, read through it. We'll, of course, discuss it from the examination questions as well later.
Okay. Okay, thank you.
Most welcome.
So what happens in like a business combination kind of situation where how does the appointment work in that situation?
Business combination as in a joint venture?
Yeah, because ideally you have certain amount and certain amount. So how does that work with its executive or non-executive?
Okay. See, this again, the joint venture, we'll have to see whether they are forming in a corporate setup or not. Okay. Sometimes a joint venture is not a company, it's just, a mutual agreement. It's basically a contractual, very short-term entity. And that short-term entity will be based upon mutual understanding. So, for example, if you and I start a joint venture, maybe we register it as a corporate, then the corporate governance regulations apply. If we are not, because see, joint ventures do not get generally listed on the stock market, and because the public's money is not much involved, hence, the governance frameworks are not applying to them. But based upon our mutual understanding, we'll say, okay, boss, 3 directors you nominate, 3 directors I nominate, and this is how the mutual decisions will take place.
Okay. So the executive and non-executive don't play a role in this, or
It will not if there's no stock market listing.
okay, got it.
And I have a small doubt. Like, are there any rule that a family member can or cannot become a board of director? Because now, if we see the annual report of Reliance itself, Mukesh Ambani is the chairman. Anant Ambani, Anil Ambani, Isha Ambani, including his wife, all are directors.
Yeah,
So
they can become part of the board of directors, but they are not independent directors.
yeah, got it. Okay, they can be
They
a
can become a part of the
executive
board of
director, but they
directors.
cannot be an independent director. That's what you can
Correct.
say. That
Correct.
is also because they have the majority vote shareholding. Is that the reason, or
They have a shareholding, they have a family relation, they have the self-interest threat, they have familiarity, a lot of issues.
but threats are also there, no? As since they
Sorry?
are so as since they are the executive in the board, they are in the board. Similarly, there are threats also, right? Like self-interest threat. All those threats also will be there, no?
The threats are also there. Absolutely. So hence they are not independent directors. They are the normal executive directors.
Okay, so between independent and executive, independent holds the power. You mean the non-executive director holds the power, right? Okay.
Holds the power. See, the difference between their role is the executive director will take the day-to-day decisions. Non-executive director will only see whether they are working in the correct direction or not.
Okay.
So, for example, BJP is into power right now. Okay, so BJP is taking all the decisions, they are passing all the bills, but the non-executive directors, the opposition parties, are challenging them. Okay,
Got
they
it.
also have a say, they also have votes into say was whether a bill should be passed or not. Similarly, we've got the role of executive and non-executive directors.
Okay. Okay.
Tanji, thank you so much. I will see you guys next Saturday now.
Thank you, sir.
Thank you.